Breaking news in the crypto world as Ripple's chief legal officer, Stuart Alderoty, sends shockwaves through the entire digital asset community with his latest statement declaring that the United States Securities and Exchange Commission, after years of relentless enforcement, endless courtroom battles, and controversial regulatory overreach, has officially dropped every single case against every cryptocurrency company across the nation, marking a monumental turning point not just for Ripple and XRP, but for the future of digital assets as a whole. Because what was once viewed as an uphill battle against an agency determined to label innovation as securities fraud has now shifted into a victory that could forever alter the course of crypto adoption in America, and with Alderoty's bold words echoing across the industry, the significance of this move cannot be overstated. For years, the SEC stood as the looming giant casting a shadow over blockchain innovation, launching lawsuit after lawsuit from Ripple to Coinbase to Binance to Kraken, using enforcement by litigation as its weapon of choice to try to control the narrative and slow down adoption. But now that weapon has been dropped, the case is dismissed. The courtroom doors slammed shut on one of the most controversial eras of crypto history. And what does this mean for XRP? It means clarity, it means freedom, it means validation, and it means a new era where Ripple no longer has to fight regulators but can focus solely on scaling, building, and cementing XRP as the settlement asset for global payments. Because if the SEC has dropped its war entirely, then the door is now wide open for legislation, collaboration, and institutional participation. And make no mistake, this isn't just a victory for Ripple. It's a victory for the entire crypto industry in the United States, which has been craving clear rules and fair treatment. Alderoty's announcement means no more fear of surprise lawsuits, no more chilling effect on innovation, no more uncertainty over whether your token will be labeled a security overnight. Instead, the message is clear. The era of suppression is over, and the era of adoption has arrived, and XRP is standing at the center of this storm, ready to take its place as the asset of choice for banks, governments, and financial institutions worldwide. Because now, with no legal shackles holding it back, Ripple can accelerate its partnerships, expand its on-demand liquidity corridors, integrate further into the banking system, and finally unleash the full potential of the XRP ledger across tokenization, payments, derivatives, and central bank digital currency frameworks, while at the same time institutions that were previously hesitant due to regulatory uncertainty now have the green light to allocate capital, to add XRP to balance sheets, to invest in Ripple's ecosystem, and to participate in a digital transformation without fear of the SEC knocking on their doors. This single declaration from Alderoty that the SEC has dropped every case will ripple across markets, ignite confidence, and act as fuel for a wave of capital inflows, the likes of which the industry has never seen. Because what had been a war of attrition is now a clean slate and a green light, positioning XRP not just as a survivor but as the flagship of legitimacy, resilience, and unstoppable adoption. And while skeptics will question whether this truly signals the end of regulatory battles, the fact remains that the SEC has admitted defeat, and defeat at this scale means the rules of the game have changed forever. America is now free to lead crypto innovation instead of driving it overseas, and XRP will be remembered as the catalyst that fought the toughest battle, took the hardest blows, and still emerged as the asset that not only survived but thrived. So buckle up, because with the SEC gone from the battlefield, the road ahead is wide open, and XRP is no longer running a race with chains around its legs. It's sprinting toward mass adoption, institutional integration, and potentially life-changing valuations that were once thought impossible. Because when Stuart Alderoty declares the war is over, it signals not just an end but a beginning, the beginning of a new age, where Ripple, XRP, and the crypto industry finally take their rightful place at the center of the global financial system. An age where banks, companies, and individuals embrace the technology without fear, and an age where XRP holders may soon see the reward for their patience, their resilience, and their unwavering belief that one day justice would prevail and clarity would arrive. Wall Street analysts predict XRP to exceed 50.0, up from the already staggering 25.37 previous prediction, and this shocking revision has sent shockwaves through the global financial community, because when the most powerful analysts in the world, backed by institutional capital, begin raising their long-term forecasts for a digital asset once dismissed as speculative, it signals not only confidence, but a structural shift in the way global finance views XRP. For years, Ripple has positioned XRP as a neutral bridge currency, a settlement mechanism for global cross-border transactions, but the narrative is evolving rapidly. Now, Wall Street is modeling XRP not only as a payment facilitator, but as the potential backbone for tokenized asset flows, real-time foreign exchange, derivatives, and sovereign debt settlement, meaning we are talking about trillions upon trillions of dollars in value that will be directly tied to the utility and liquidity of XRP. The original 25-37 target was already unprecedented, calculated based on liquidity requirements to support cross-border settlements and tokenized financial flows, but the new 50 target reflects fresh models that incorporate the explosion of tokenization markets, the integration of institutional adoption programs, and the staggering liquidity injection expected once real estate, equities, bonds, and commodities begin to move across the XRP ledger at scale. Analysts point to the Institutional Asset Program, global central bank pilot programs, and Ripple's deep ties with financial behemoths as catalysts that could push XRP into unprecedented territory, and what was once dismissed as science fiction is now being openly discussed in closed-door financial strategy meetings as a credible outcome of the ongoing convergence between blockchain and legacy finance. These analysts note that the XRP ledger is unlike any other blockchain in existence. It has proven resilience, transaction finality, ultra-low fees, scalability, and most importantly, it is regulatory friendly compared to competitors that struggle with compliance hurdles. This makes XRP uniquely positioned to capture not only cross-border flows but the entire tokenization revolution, which is projected to be worth hundreds of trillions of dollars by 2030, and when that kind of capital begins moving through a network with a capped supply of 100 billion tokens, many of which are locked or held by long-term investors, the price must mathematically recalibrate to absorb this demand. The jump from 25-37 to 50 reflects analysts' growing belief that Ripple's role in global finance is not simply as an option, but as an inevitability, with some comparing the moment to the early days of the internet, when companies like Amazon or Google were underestimated until their infrastructure became indispensable to the world. At 50 per token, XRP would represent the true monetization of global liquidity itself, a settlement layer capable of handling anything from microtransactions to trillion-dollar interbank settlements, all secured and verified by the XRPL. The skeptics who once scoffed at three-digit price predictions for XRP are now being drowned out by analysts who understand liquidity, math, supply scarcity, and institutional adoption models that fundamentally transform price expectations. And when Wall Street starts to raise targets, it's not about hype, it's about preparing clients for a reality that is approaching faster than the public realizes. Ripple's ongoing partnerships with central banks, its progress with regulatory clarity, and its positioning in tokenized asset markets are aligning perfectly with this forecast. And while retail investors are still arguing over whether XRP can break past 10 or 20, institutions are quietly modeling five-figure valuations that reflect the scale of liquidity XRPL is about to support. What this means is simple. The market has dramatically underestimated XRP, and those who fail to grasp the magnitude of these shifts may miss one of the most transformative opportunities in financial history. Analysts now frame XRP as digital gold on steroids, not because it competes with gold, but because it transcends it, offering not only a store of value but active utility as the lifeblood of a new financial system. And when you combine the store of value premium with the utility premium, you get explosive price multiples that justify the 50 forecast. This is not just about Ripple winning a case with the SEC or securing a few corridors. It is about the wholesale replacement of legacy infrastructure, the replatforming of global finance onto blockchain rails, and the creation of a single, interoperable liquidity layer for the entire world. At 50 per coin, XRP would no longer be a cryptocurrency as the market defines it today. It would be a monetary instrument underpinning the backbone of international trade, capital markets, and central bank liquidity. So when Wall Street analysts raise their predictions, they are signaling to their institutional clients that this shift is not just possible but inevitable, and that positions need to be taken before the floodgates of global liquidity fully open.